Good morning, everybody. This is Chris Robinson, Robinson Ag Marketing with today's pre-opening grain and livestock comments for the 12th day of March. Okay, the number one thing I wanted to, there's a lot to cover. But first, China and their phyto restrictions with beans coming out of South America. Cargill has stopped shipping beans because the Chinese have put on phyto restrictions, basically looking for weeds and stuff. It's a way for them to slow down the exports coming out of China. Now, why are they doing that? Well, for one reason, the South American farmer is 60% done with their soybeans. They don't have storage down there like we do. So they're going to be continuing to pressure prices down there. So our beans are more expensive. It's slowed down our bean exports, but China in general is slowing down stuff coming in. And I don't know if you saw, but I mean, there's long lines for gas in China. There's a lot of moving parts going on right now. In any event, when the situation with Iran is over and done with, when the Strait of Hormuz reopens, because we are so well supplied, I would imagine there's going to be a price break. That was just what logic would surprise. Now the guess is when is it going to come? I don't know. So what we will do is maintain our defensive hedges as best we can with put options and wait it out. But when this is over, the supply and demand situation really doesn't justify these very, very high prices. You've had fund money come pouring into the grains, not only here, but in Europe, because they're looking for it as a substitute, as, bioengineered fuels. So you've got money coming into corn and beans, which normally wouldn't. Open interest has been jumping. So this is a interesting situation. I think certainly 5, 10 years from now, we will be studying, gee, if you'd only done this, you could have done this. I mean, so it's an opportunity. But in my opinion, the big risk is this weekend we're going to have a meeting with the Chinese as a prep meeting for the big meeting, which is supposed to be the last weekend of March, the first weekend of April. President Trump and Xi are supposed to meet, and there's a lot riding on that meeting. It couldn't have come at a more interesting time with what's going on in this world. So we are higher overnight in beans. Um, we've seen higher moves in the grains as well, but I just think that is what's driving this right now. May corn up 5.5 cents at 465 and 3/4. It traded at a high of 466 and a half. Decent new crop corn almost got to 495 for a high of 494 and a quarter. Are we going to get a $5 print? I sure do hope we do. The contract high in D's 2026 is 512 and a half. If you look at November soybeans, 1167, they are only up, say only up 3 cents. A lot of this money is coming into the spot month because it's speculative fund money. That's why May is up 15. Um, if you look at the selling opportunity for producers, in my opinion, it's the fact that we're back up there near the spike high at 1172. So I put in my letter tonight that I want everybody to use this to get to at least 30% sold of guaranteed bushels in soybeans, and that's how we're going to play this. And everything else, you can get yourself a really nice substitute floor, an 1150, certainly 1140 or 1130 right now might be in the books. At minimum, I would at least want to project 1125, 50 cents under, because again, once this situation is over, when we go back to playing with supply and demand, I don't think we're going to be at these levels unless there's a drought this summer. So please don't miss the forest for the trees. Um, we are basically just trading with crude oil, and crude oil is back up to 93 bucks. Actually traded at 95, almost 96 last night. It's at 93.22 as I talk to you. It's also giving wheat a chance, and we've got some wheat calls on for guys that sold wheat earlier. We're going to be looking to take profits. If you bought calls anytime in the last month to re-own any sales previously, make sure you are managing the value of those calls. If they double, great. Make sure that you at least get back your premium that you paid for them, so that you kind of have a free look here as we all wait and see when and if this situation gets resolved. Because when it does, and we go back to trading supply and demand, I think we may have lower prices just based on historical tendencies. In the cattle market, we were under pressure yesterday. The stock market right now, it's not down horrendously. It's down 300 points. The S&P is down 50. So yeah, the stock market doesn't like what's going on, but it is certainly not in crash mode yet. I've been saying this for a while. I said it yesterday on RFD TV. The cattle right now is trading as a surrogate for the S&P 500. The cattle market underneath is extremely strong. The packers are now making money again. There's a worry out there about the strike in Greeley, but that won't go into effect until Monday. So we'll see if that actually comes to fruition. So a lot of moving parts. My takeaway is this: China is trying to slow down imports coming out of Brazil. Brazilian farmers under pressure because they don't have the same storage capacity that we do, so they have to sell it. Um, it's a very, very interesting opportunity. And I think that, again, 2 years from now, 3 years from now, we're going to be looking back saying, um, this was a great opportunity. And so that's the way I look at it. If you're a farmer producer, don't let this go away. If you've never hedged before, um, we're at 2 year highs in new crop corn and beans, the highest prices we've been. And I know it's hard to set a hedge when you don't feel comfortable because you don't know where prices are going. The reason we set a hedge is because we don't know where prices are going. If you're a farmer or producer, you're always bet long. You want prices to go higher. But when you get these rallies, you need to take some action. So, on that note, give me a call 312 638 8868. And I'm going to leave you with this: nobody's going to sell the high, nobody buys the lows. What we're here to do is to catch the meat of the move. If there's an old expression, the enemy of the good is perfection. Um, if you will not be happy, if your definition of happy is that you sold every one of your bushels at the stone cold high, you're never going to be happy. So get that out of your mind. Take advantage of this huge rally. Um, Again, when this story with crude oil is over, I'd imagine we're going to have a correction in these prices when we get back to trading supply and demand. This is Chris. Have a great day. Thanks.